Each and every week, the market changes in a variety of different ways. It goes up, it goes down, it goes all over the place. And here to clear up some of the confusion and tell us where we're at is Michael Greiner, Assistant Professor of Management at Oakland University's School of Business Administration. Michael, thanks for being with us again this week.
It's great to be back, Tyler. How are you today?
Doing all right. How are you doing?
Good, good. Glad to be here.
Yeah, glad to have you with us. So it finally happened. Elon Musk has purchased Twitter, and that's already having some big impacts. He made an announcement yesterday. He fired the individual that was responsible for ultimately banning Donald Trump permanently from the social media website just a little bit over a year ago, and already some ripples happening there. But across the board, social media websites are having a little bit of a struggle for a variety of different reasons. What is going on with these social media sites?
Yeah, that's kind of an interesting thing. And Elon Musk, he didn't just fire one person at Twitter. He fired basically the whole executive suite. And there's talk that he's going to fire as many as 75% of the current employees there, which is kind of hard to imagine how they'll keep operating with that kind of a cut. But I guess we'll see. He's Elon Musk, so we'll see what happens. But I think the biggest issue that you're facing right now with social media has to do with a couple things happening, but the main one to me is that their business model is built on advertising. I always ask my students, one of the things that you need to know is what business are you in, and when I ask people what business is Google in, for example, and you'll hear social or the social media, or they're in the search engine business or the website business. But the reality is they're in the advertising business. And that's true for all of the different social media sites. Basically, the source of all their revenue, and it's very substantial for Google, for example, who, of course, owns YouTube, one of the major social media sources. But it's true for Facebook, it's true for Twitter, it's true for all of them, that basically the source of their revenues is advertising. It's been very lucrative for some of them. I mean, certainly it's been lucrative for Facebook and as well as Google. But the problem with this is, though, that advertising is something that's very sensitive to changes in the economy. And as we know, businesses right now are very concerned about the direction that the economy is going. And is there going to be a recession forthcoming? And if there is, they want to look for places that they can cut down on costs. And one place that business frequently thinks they can cut down with recession coming is in advertising. So I think that's kind of the top line figure that you see here. But then if you look at some of the individual social media sites, it seems like some of them have some problems that are specific to them. For example, Facebook, kind of its main app, Facebook. Back when I was younger, that was kind of the new exciting thing that young people were getting involved with. Now, most of the people who use Facebook tend to be older, actually, and young people aren't engaging with Facebook the way that younger people used to back in the past. So Facebook is really concerned about its long-term prospects, and that's why it kind of shifted over to this strategy of where it's going to get into the metaverse, and it changed its name to Meta from Facebook, and it developed a virtual reality headset, I guess, which actually has gotten very good reviews. But that being said, it's investing all this money in this new product that has yet to show any kind of positive return. In fact, my understanding is they lost almost $4 billion on the product in the last quarter. So as of now, it's still yet to be seen if Facebook's going to be able to turn a profit in that and really essentially shift their business model from one that really is ultimately going to be in decline. Because no social media site lasts forever. Just ask some of the ones that have disappeared in the past. So there's that with Facebook. Then, of course, we know what's going on with Twitter. And part of the problem with Twitter, too, is it's never been able to generate the kind of revenues with its advertising the way that Facebook has. I think because people don't engage in it to the extent that you see on Facebook, for example. Then separately, some of the big ones that we see right now, there's Snapchat and some of those. And those, as it turns out, are owned by Chinese companies. Which then has created some tension where we see this increasing international tension going on between the United States and China. So that kind of jeopardizes some of them. And then finally, you see some of these new social media sources that kind of came in to try to address the fact that Twitter was banning certain people from its website as a result of misinformation, essentially. And as it turns out now, with Elon Musk back in charge of Twitter, or in charge of Twitter now, what that's going to do is allow a lot of these people to come back, which will probably doom a lot of those other companies. So point being, there's a lot of unique problems to each of the companies that are in that space right now. But overall, I think it's a reflection of really some of the weakness in the economy that we're facing right now.
And as you mentioned earlier on, typically what happens when you're heading into a recession, or as you go into a recession, these sorts of companies, or companies across the board, one of the first things they start to cut is their advertising. And so seeing those trends in advertising going down already on social media, certainly affecting those companies. Everything else we're seeing in the economy, plenty of people are already out there asking, so where are we? Are we in a recession, or are we not in a recession? Because there's plenty of bad news that's suggesting we might be, but there's also some good news that's suggesting maybe that's not going to happen.
Yeah, that's a great question, and that's really the $64,000 question that everybody has been asking right now. I think most economists, generally speaking, agree that we're not in a recession right now. That being said, most economists also agree that we're going to be going into one, that we're kind of heading in that direction. I think also the good news is most economists agree that the recession is probably going to be very mild and short. So that's good news. Of course, there are those who say that we're currently in a recession. There are those who say that the recession that we're going to go into is going to be very severe. But overall, I think that's generally the consensus that you're seeing. Now, the reason that this is an issue is because when you look at kind of the top line gross domestic product, or GDP figures, for the last 3 quarters, the first 2 quarters of this year, we actually saw declines in GDP growth. And the definition, kind of the back of the envelope definition that you see a lot of people talking about as what defines a recession, is 2 consecutive quarters of negative GDP growth, which we had. So does that indicate we have a recession? Well, it sure didn't feel like a recession in a lot of ways, because by the same token, jobs growth has been very strong. We've also had very strong increases in wages, and we've also had some very good reports from a number of companies in terms of their revenues. In fact, one that I know is going to be near and dear to the hearts of a lot of people here in Michigan is we got a very good report from General Motors, which is, of course, something that probably makes everybody breathe a sigh of relief around here. There's that old saying that when the country gets a cold, we get a pneumonia here in Michigan. So that's definitely a concern, and the fact that GM's doing well is certainly a good sign. But even within that context, when we see some of these good news figures, even they are pointing to the fact that there's some rumbling within the economy that indicates we are going to go into some sort of recession in the not too distant future. Some examples include, for example, we received a good profit report from Amazon.com. Good news, right? Yay, Amazon did well. And you would think that's especially good because of the fact that Amazon reflects such a wide use of the economy now. If you want to look at something that reflects how the economy is doing, probably look at Amazon.com. Another company that we saw that for was UPS. Again, if they're delivering a lot of stuff, then that's probably a sign that the economy is doing pretty well. But when you look a little bit below those figures, you see that Amazon is warning that basically a lot of its divisions are slowing in growth. One of the biggest areas of concern for it, actually, are its international division, and this reflects something that we've talked about on this show before, which is the fact that right now the dollar is very, very strong. So what that means is for people in, say, Europe or Japan or China, buying something that's American costs a lot more money to them because of the fact that the dollar is strong relative to their currency. So as a result of that, that's hurt their international operations. Their domestic operations, interestingly enough, they have a big source of revenue in advertising. Well, not terribly surprising, just as we were talking about with the social media sites, their advertising has gone down. In fact, the only division that Amazon has had that was profitable, and they were so profitable that they generated profit for the entire company, was in their web services, where basically they do things for companies like host databases and that type of thing, and that did pretty well. But again, it kind of points to some weakness because it points that businesses are kind of outsourcing a lot of this stuff and trying to cut their costs out of fear that long run we could be facing a recession. Similarly with UPS, good report, yay, good news, right? Well, the problem is their good profit report was largely due to the fact that although they're shipping fewer products, their people are paying more per shipment because of inflation. So that seems to indicate a good news on the bottom line for UPS. But when you look at it overall, it indicates some ongoing weakness. And even the good news that we got with gross domestic product growth in this quarter that just ended, that one increased, I believe, by 2.6% year over year, which is a pretty good rate. And you'd say, yay, good news on that. But really, when you look again a little bit below the figures, it appears that most of that is due to the fact that imports have gone up and I'm sorry, that exports have gone up and imports have gone down. Well, exports are things that are produced here in the United States, whereas imports are things produced overseas. That has to do basically with two things, again, that we've talked about here. One is the strong dollar, and the other is the shift from people buying goods, many of which are manufactured overseas, to buying services, many of which are manufactured or created here. People going to restaurants or travel, things like that can't be outsourced as easily. So when you look at it, it looks like there's some strength in the economy. The job market is still good. We received another strong report in terms of wages going up, which is a double-edged sword when it comes to inflation. But still, I mean, it indicates there's strength there. But by the same token, it clearly indicates that there is going to be some weakness going forward. The rate increases that the Fed has been making have been taking an effect, and we probably are going to be seeing some sort of slowdown within the next 6 months.
We're joined by Michael Greiner from Oakland University on this edition of the Megacast. Michael, lastly, a couple more minutes with you today. We know that the impact of student loan forgiveness could have a significant impact on the economy, certainly on available dollars into the economy for those for individuals to pay back some of their debts, and of course, most importantly, in most cases, be able to stay in their homes and afford to pay their bills. There's been some backlash, as was expected, from the student loan forgiveness program through the Biden administration, with some attempts to block it as well. But the Supreme Court intervening and providing a little bit of a win recently for the Biden administration. How is that impacting student loan forgiveness, and where is that at in terms of its viability at this point?
Yeah, I got to tell you, I mean, I feel a lot of sympathy for people who have student loans right now because you're feeling a lot of whiplash right now with it seems like it's going to happen, then it doesn't seem like it's going to happen. Every day seems like you're getting different good news or bad news in terms of it happening. The administration did open up a website that allowed people to apply for the student loan debt forgiveness, and anybody who hasn't done that yet, who does have student loans, should definitely go to that website. But already 22 million people have applied for student loan forgiveness. That's about half of the people who are eligible, is my understanding. So, a very substantial number of people have already applied. The website is up and operating where you can apply. That's all good news. Then what happened is that there were a couple of legal challenges that were launched. One was by essentially a taxpayers group based in Wisconsin, I believe, who challenged it. And another was a group of Republican led states, I believe 6 of them, that filed a lawsuit in the federal district court in St. Louis. Well, last Thursday, I believe, we received good news on 2 of those fronts. The lawsuit in St. Louis was actually essentially denied any kind of injunction. Basically, the local court ruled that they didn't have standing, that they didn't have a basis to file their lawsuit, which frankly has been my contention since day one. And similarly, Amy Coney Barrett, of course, one of the appointees of the last president at the Supreme Court, ruled that this citizens-based lawsuit from Wisconsin that it also did not have standing to go forward. So it seemed like we had good news. It seemed like the student loan forgiveness was going forward. Then, literally within a day, the states that had received the denial in St. Louis appealed up to the Eighth Circuit Court of Appeals, and that court issued a stay of the program while it reviewed the filings. So the question is, what is the Court of Appeals going to do if they grant it? I can expect that it's going to get back up to the Supreme Court. Who knows what's going to happen there? I think that most people with student loans right now are hoping that the Court of Appeals is going to rule like the Supreme Court has and like the District Court have, that there isn't a basis for these allegations to go forward against the student loan program. And if so, then you'll start to see the money probably being dispersed, I would say, by November, within a month. If not, who knows with the way courts operate. So I can see why everybody's kind of sitting on the edge of their seats on that.
More information will certainly be discussed in coming weeks as this continues to be negotiated one way or the other, deliberated on one way or the other. And as more fluctuations happen in our economy, we'll continue to go back to Michael Greiner from Oakland University each and every week. Thanks, Michael. Appreciate it.
Sounds great. Have a good one, Tyler.